Hey everyone, and welcome to this explainer. Okay, so if you're a busy parent, I know you are already juggling a million different things. But today, we're going to focus on one specific role you have, your job as your household's chief financial and security officer. We are cutting through all the confusing noise out there to give you a definitive, no-nonsense cybersecurity playbook. We are talking about the absolute single most effective way to protect your family's financial future, and that is freezing your credit.
Now, if you've been feeling anxious every single time you see a news headline about another massive corporate hack, let me just say your feelings are totally valid. Just look at this number from the Identity Theft Resource Center's 2025 data breach report. 80%. That is the staggering percentage of consumers who received a data breach notice in just the past year alone. It's huge. Data breaches are practically a universal experience now. Your data and your family's data is very likely already out there. The era of just crossing our fingers and relying on corporate protection, yeah, that's officially over. We have got to move from reacting to actually acting.
So here is our playbook for today. First, we'll look at the data breach reality. Second, we'll break down credit freezes versus locks. Third, we'll go over exactly how to freeze your own credit. Fourth, we'll talk about protecting your kids' credit. And finally, we'll walk through a real-world car loan scenario. Let's get into it.
Okay, Section 1. The data breach reality and why we need to stop reacting and start acting.
You know, when a breach happens, the offending company almost always tries to make it right by offering you free credit monitoring. But as our sources, like Morgan Stanley, point out, credit monitoring is really just a security camera. Think about it. It just records the robbery and alerts you after the thief has already broken in and opened an account in your name. You still have to spend countless hours dealing with the mess. What you actually need is a deadbolt to stop the thief from getting through the door in the first place. And that deadbolt? That's a credit freeze.
Moving right along to Section 2, credit freezes versus credit locks. It is super important to know the difference here.
So, there's a massive, stark contest in the legal protection you get between these two. A credit freeze is a federally guaranteed right under U.S. law. It is completely free to place, free to lift, and it puts a complete block on accessing your credit file. It's regulated by state and federal laws, which basically means you get really robust liability protection. On the flip side, a credit lock is just a voluntary commercial product. Sure, some might be free, but others, like Experian's Credit Lock or TransUnion's premium stuff, can cost you around $20 to $25 a month. And more importantly, locks are governed by a contract written by the credit bureau itself. Those contracts often include arbitration clauses that can actually limit your legal rights if something goes wrong. So the takeaway? Stick with the federally protected, free option. Go with the freeze.
All right, Section 3, freezing your own credit. Let's take control.
The most absolutely crucial rule to remember here is that you cannot just freeze your credit at one single bureau and call it a day. You have to individually freeze your credit at all three major bureaus to fully close any protection gaps. I mean, think about it. If you only freeze Equifax and Experian, a fraudster can just go find a lender that pulls from TransUnion. It's a three-step process, but the good news is you can do the whole shebang entirely online or over the phone. In fact, you might want to pause this explainer right now and grab a screenshot of this. For Equifax, you'll go to My Equifax or call 800-349-9960. For Experian, use their Freeze Center online or call 888-397-3742. And for TransUnion, it's My TransUnion or 888-909-8872. It literally takes just a few minutes to create an account at each one and just toggle your free status on.
Okay, on to Section 4, protecting your kids' credit. Let's secure their future.
Now, you might be asking yourself, wait, do my kids even have credit reports? Well, typically, no. And honestly, that is exactly the problem. Because they don't have an established file yet, a child's social security number is just this beautiful, clean, blank slate for a fraudster. They can take your kid's SSN, combine it with a totally different name and birth date, and boom, they've created a synthetic identity. And the absolute worst part? This kind of identity theft might not be discovered for 10 or 15 years. Usually it pops up right when your kid is trying to apply for their very first student loan or their first apartment. Because minors don't have those existing files, you can't just hop online and click a button to freeze them. The bureaus actually have to legally create a file for your child first, specifically so they can freeze it. So yeah, it makes it a bit of a manual process. You're gonna have to gather some identification documents, physically mail the request to Equifax, Experian, and TransUnion, and then wait for them to create and lock down the files. I like to frame this as a really vital weekend project. It takes a little elbow grease, sure, but it pays off with literally a decade of security for your child.
And to prevent just anyone from freezing a child's credit, the bureaus obviously require heavy proof of identity and guardianship. Now, I know tracking down paperwork isn't exactly thrilling, but you'll need to make clear, legible copies of your driver's license or government ID, your social security card or birth certificate, your child's birth certificate, and your child's social security card. Once you gather all those up, you'll mail the copies along with a freeze request form to the dedicated Security Freeze PO boxes for each of the 3 bureaus. Once they receive it, they usually process it within about 3 business days, and then you are totally set.
Finally, Section 5, the car loan scenario. Let's see how fast and frictionless this actually is. A lot of people worry a freeze will ruin their life or make applying for things a huge hassle. So let's play this out. Imagine you're at a dealership on a Saturday and you found the perfect family car. At minute 1, you decide to pull the trigger and buy it. By minute 10, while you're inevitably sitting there waiting for the finance manager anyway, you just ask them, hey, which specific credit bureau are you going to pull from? Let's say they tell you TransUnion. You simply log into the TransUnion app right there on your phone or give them a call and request a temporary lift. By federal law, if you request a lift online or by phone, the bureau must thaw your credit within 1 single hour. In my experience, it's usually almost instantaneous. So by minute 60, the dealer runs your credit and you're approved. Easy. And honestly, here's the absolute best part. When you lift that freeze at the dealership, you don't even have to remember to log back in and refreeze it later. The bureaus let you schedule an expiration date for your thaw. You can just tell the app, hey, keep my credit open for exactly 48 hours, and then lock it right back down. It is quite literally a set-it-and-forget-it feature. It's automation for your ultimate peace of mind.
So we arrive at our final thought for today, and it's a direct challenge to you. Are you prioritizing temporary convenience over your family's permanent financial safety? The 2025 Data Breach Report put it perfectly. A little bit of process friction might be the exact difference between avoiding an unnecessary risk and becoming a cyber victim. By just embracing the tiny hassle of managing a credit freeze, you are completely outsmarting the fraudsters out there. So take the hour this weekend. Get those apps downloaded, get those letters mailed out for your kids, and secure your family's financial future right now. Thanks so much for joining me for this explainer, and I will see you next time.